Chioma, thanks so much for speaking to us today. So we are beginning to see the central bank, if you like, tighten liquidity with the OMO auction we saw late last week. And prior to that, we saw that they have been really quiet with OMO activity, which actually spurred some suggestions that maybe the MPC would ease rates. But of course, that didn't happen. Your thoughts on the type of tightening we can anticipate this week, given the liquidity you're seeing in the market?
Okay, I'll start with last week. We came into the market last week with about 1.2 trillion in the market, so there was a little pressure on the rates in the markets. However, on Thursday, we saw the central bank come into the market to take out about 700 billion the market. That caused a mixed to bearish bias in the market after the OMO auction. We expect that this week we'll see some more tightening from the central bank. That will, help bring up the rates from the 5% we're seeing trade in the money market.
Right. But how big would you say is the risk that if the central bank does not continue to issue these OMO bills, that there could be some pressure on the currency? Because that's always been the argument. If there's easing, then there will be pressure on the currency.
Right now, we still have seen yields, at the primary auction. Yeah. Yields is at the highs of 15. So I think, yes, we agree. If it's protracted, if it happens for a long time, we might begin to see some pressure on the foreign currency. But right now, I don't think we'll get to it. I think that with the liquidity in the market and the maturity on Thursday came from OMO, we're going to see them coming to take mop up some.
But liquidity. That pressure, if it were to happen, will it be because foreign investors are either not bringing fresh dollars or taking out dollars, or would it be as a result of people who see the opportunity to pick up foreign exchange because of the low yield environment and low interest rate environment?
It's neither here nor there, but I think that there's relative calm in the FX market. We've seen a lot of liquidity. We're still seeing interest from the foreign investors with the presumed lower yields than what we've seen. I think if it happens, we might not see the pressure in the immediate, but we'll watch it from there. And with the support from the central bank, I think that the pressure on FX won't be so much.
What is your outlook for yields going forward? There is that expectation that maybe not at the next meeting, because that should be next month, but perhaps at subsequent meetings we could see some easing at the MPC. What impact do you anticipate that would have on yields going forward?
If you
look at the medium term.
Yeah, okay. For the medium term, the last MPC, the central bank governor spoke a lot of the negatives if he drops interest rates. So I don't think we're going to really see a sharp drop in the interest rate. It's going to be very moderate. And like I said, for the foreign investors that's bringing funds in the market, I think that right now they're comfortable with the yields at double digits, and the pressure on the yields won't be so much because of the home auctions. We see the central bank come to take out excess liquidity from here.
Right. And you just mentioned double digits as perhaps being the minimum expectation of foreign investors. Is that really it? Do you anticipate that as long as we have double-digit interest rates, T-bill rates now, that foreign investors will still be interested in Nigeria? Or do you think it gets to a point that they may just...
What I said, I said they are quite comfortable with double digits, but investors have different outcomes they expect from their investment. So you can't classify investors on one platter, on one reference. So I think it depends from investors to investors and what they're comfortable with. But I think Nigeria as an emerging market, they are quite comfortable with the rates where they are right now.
All right, okay. And so what about the currency, though? Now that we're seeing oil firmly above $60 a barrel, there's that expectation that those reserves will continue to rise. Do you think that it gives, or even, does that, if you like,
it creates some buffer? Yes, it creates.
The point I'm trying to make is, would you say that guarantees that we will have stable rates, even though we're anticipating that perhaps in the third or fourth quarters we could see some foreign investors decide to pull out funds from Nigeria because of the pre-election concerns?
I think we're going to have some stable rates with the INE window very, 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 very efficient. Right now we've seen a lot of interest in that window. And then we've seen that the customers right now have shown more interest in that window. I think with the I&E window very active, we're going to see a relatively stable market and a little pressure on the FX.